Well, hello
Hello.
everybody. Scott, thanks for that intro. Steve, what's happening?
Hello. Hello. Monday's happening.
Yes, it is. It is Monday. Welcome everybody to another Monday edition of The Office Hours. It's December 10th. I'm Jamie, your host, and I've got my trusty wingman, Steve Gomez, riding shotgun. And Steve, I was telling you about my issues with my heater, but
Hmm.
for those of you out there may or may not know, I live in Texas now, and it's been pretty cold. So Jamie's heater went out. So it's been a lot of fun getting that fixed, and the repairman just left, and it was freezing, and now I'm too hot. But hopefully I'm going to be okay during this webinar. I just had
Open a
to turn
window,
everything
Jamie.
back off. Yeah. So went from freezing to being excessively hot, but hey, what are you going to do? All right. So, you know, hopefully we'll get through this webinar without Jamie having a heat stroke now, going from hot to cold, cold to hot. In any case, welcome everyone. Boy, I think the market has been a little hot and a little cold as well. And of course, we'll get into that in just a moment. But before we do, let's make the lawyers happy and just let everybody know. For those of you who regularly attend, you already know this, but it's good to say it every time here. All the information that we share with you guys in this webinar or any of the other ones that we do is for educational purposes only. If you do need investment advice, what to do, when to buy, when to sell, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker, someone that's licensed to be able to dispense that type of information. Everything we share with you, educational purposes only. Now, in addition to the award-winning technology that is Trade Ideas with artificial intelligence, we've created quite the community around the technology, which is kind of important. Lots of support, lots of learning. It all kind of starts with these 5 p.m. Eastern webinars. But I would be remiss if I didn't mention kind of what started it all many, many years ago. The Traders Room, hosted by Barry Anderson. Now, if you've shopped trading rooms around on the web, you know that most of them are not free, and if they are free, probably lacking in quality. Not so with ours. Barry has been doing this for years now. I forget how many years it's been, but it's quite a few. And he's built up quite a room of, could be 400, 500, 600 people in there, depending on the day. And whether or not we're conducting a test drive. But even in non-test drive modes, I mean, hundreds of people in there on a daily basis. And the best thing about it, other than Barry, is that he's showcasing how he uses our technology and, fostering a good learning environment, especially good to go in there if you're new and trying to get a feel for everything, especially if you're new to trading in general. A great place to go. So if you haven't been taking advantage of that resource, by all means, hop on in there. Of course, today you get me and Steve. It's Monday. Steve's going to get the steering wheel tomorrow for the trade of the week, and Andy Linloff, our other good buddy, trader compatriot, is going to ride shotgun with him. And then on Wednesdays, good old hump day rolls around. Everybody needs a change of pace. And that's why we bring in Dan Merkin, the CEO and founder of Trade Ideas, along with Brad Williams, our Chief Technical Officer. Always good, always interesting. For those of you who have been keeping tabs on the development and rollout of Brokerage Plus, that's where you get a lot of the goodies, what's coming, how Dan has been testing the technology, so forth and so on. And of course, this webinar, we're probably going to start focusing shift to that product as well, just trying to figure out the best way to do that, cross all the T's and dot the I's, but it's coming. Don't know exactly when yet, and I would assume that a lot of us are going to be shifting content because, well, if you haven't heard, that's what's going to be the latest and greatest piece of technology to have moving forward, especially in 2019. We'll talk a little bit about that later. Andy's going to round out the 5 p.m. Eastern webinars on Thursday, and I ride shotgun with him. And then for the grand finale on Friday, we like to change it up a little bit. The Friday support session, which has been gaining traction, record crowd after record crowd in there on Fridays, starting at 11 a.m. and going until 2 p.m. Eastern. And most of the time you get myself, Steve, Andy, and Sean in there all at the same time, all able to put our heads together, answer your questions, talk about things, whatever it is, TI related, Brokerage Plus, come one, come all for the Friday support session. Now, some of you may or may not know, we used to offer one-on-one training sessions free for everybody that subscribed, but we're kind of getting a whole lot of subscribers here, a lot more than we used to have. So that's why we pivoted to the TI University. Starting on Mondays, we have Beginners 101, Tuesday 201, Wednesday 301, and then we round the TI University out on Thursdays with Advanced 401. Yours truly teaches the Advanced 401 course, which we deal with a lot of back testing and optimization, along with some other things, but that's what eats up most of the day. Now, we do recommend that you take these in order because you're going to need the information that you gain in 101 to make sense of 201 and so forth and so on. So if you're new and you haven't signed up for the TI University classes, by all means, get that done. It will definitely shorten that learning curve for you. Now, I was just talking about how we've been picking up subscribers. And we've got a nice new slide in here that kind of shows what's been happening here at Trade Ideas and the number of clients we've been taking on since the introduction of the AI. 2016, Holly 1.0 came online, and then we can see 17 and 18. In addition to the larger, subscriber base, well, not just one AI, not just two AIs, but a total of 3 AIs now. So these numbers speak for themselves. People are, responding to the AI. It's resonating. It makes a lot of sense. We're going to talk about it here shortly. But just like to give you a little idea of how things are going here. And of course, you're part of the community. So, thanks for being here and thanks for being a client. Okay, here we go. Off to the market recap, Steve. Are you ready?
I'm ready.
All right, here it comes.
All righty. Let's see what we got. All right. Welcome to my desktop. And let's get rid of that. I start doodling while you're talking in the intros, Jamie.
Well, I was expecting to see a unicorn or a Care Bear up there.
Maybe next week. Who knows? So let's start where we normally do. And why would somebody start calling me right at this moment? Ignore. Zooming out here on the SPY, S&P 500, I've deleted a couple of orange lines near the top, which are no longer applicable, and maybe a couple of minor lines. But these orange lines in here that you see have remained intact from price action way back here. And the reason I like to remind people of that is because those lines remain relevant. Those are the gateways, the levels, the walls, the moats where the buyers and sellers seem to want to play. So there's a few things going on when we take a snapshot here of what's happened in the last few months. Obviously, we've got the increase in volume and volatility going together. What we no longer really have is the moving averages of any relevance. They were of relevance back here when the price action was in motion and momentum. But since then, it's just been rather choppy on that front. So what I'm seeing here is, again, this orange line has acted as resistance 3 or 4 times back here, here, and here. That's where the upward momentum starts to stall. And curiously enough, this orange line down here has been holding for a while, but what's cool is you'll notice there's a couple of wicks right on that line that hold as support for the most part. But then we have days like today and the other extreme reversal day back here. So this is kind of the extreme zone down here. Below that line, there is a reversal that tends to happen. There was no follow through today. And what kind of came to mind is lately, as we talk a lot about maybe the ebook we have and different strategies instead of buying the dip, fading the rip, which would be something along up here, taking short entries after a nice bounce up. But there's a funny little axiom that I saw on Twitter the other day, and it said, friends don't let friends short in the hole. And what that means is down here was the new low. And for a moment today, we were below that new low. Well, down here, that's what you might refer to as the hole. And waiting till it feels comfortable for the herd to run on the direction and wait for the trigger to go short, most of the time doesn't necessarily work, especially in an uptrend. These are the kind of things where we would see in an uptrend. So, I mean, it could have gone either way today. I kind of expected we might have seen some follow through, but we didn't. And let's take a glance now at the intraday chart. The intraday chart shows the story in terms of where the momentum was won and lost. Once again, here is last Friday. The momentum was lost at the upside, and all day long, pretty much on Friday, that 10-period moving average on my 15-minute chart here kept corralling the SPY and pushing it lower, pushing it lower. Here's today. The open couldn't get above it, tried to bounce. Moving average started to come down, forced the issue. Still in momentum, still in momentum. So now we're down here in that that no man's land, that oversold land, where people right here were starting to get short, where we would call in the hole. But another word for being short in the hole is shorting an extremely oversold condition. It's very hard to get follow through. So therefore, we had our bounce. Now, I found this kind of curious. When you start to zoom in, and where did the momentum lose and switch? It's pretty much right here. The bounce into the declining moving average, got ahead of ourselves, and then the sideways action is always very curious to me in the process of a momentum move, either to the upside or to the downside. So here's our little sideways move for about 45 minutes. And the moving average could have very well thrown the price back down for additional lows, but it didn't. This is where we finally saw a closing candle above this declining moving average. Well, then from there, everything just pretty much flipped for the rest of the day today. We had the 10-period moving average holding that bounce higher. So again, I like to always call out when I can the simplicity of just using that 10-period simple moving average on a 15-minute intraday chart to kind of gauge the momentum of, to gauge the inertia and how much fuel is left in the tank when it comes to momentum, which is definitely what we saw today. Another thing that kind of comes to mind off topic is tomorrow. I wouldn't be surprised, Jamie, we didn't see it today. We did not see the AI strategy that Michael Noss created using a custom formula, which looks at the prior day having a hammer or a long bottoming tail. Well, tonight when Holly goes to work, we got ourselves a big old bottoming tail, and probably, I don't care, whatever it is you want to look at, there's probably going to be a lot of bottoming tails in some things. The Goldman Sachs might fit that bill tomorrow, and if stocks start making a high above today's bottoming tail high, I bet we might see, it's called yesterday's tail, today's bounce, or something like that. Do you remember the name of the strategy?
Exactly. I know what you're talking about. I couldn't quote it.
Yesterday's tail, today's highs, I think, or something like that. So I'm expecting to see that in at least one or two of the segments tomorrow after tonight's machine learning segment, because so many charts are going to look like that, just across the board, especially in the financial sector. So, back to the market analysis, it appears that we're range bound once again in this range. How did I lose that? It appears that we are range bound in these two major levels. My God, it only took 4 days to get from the extreme up, 1, 2, 3, bounce 4, and then big washout this morning. Where we go from here, I think we're going to have a little bit of a lackadaisical bounce, a little bit of a oversold dead cat bounce. Again, the moving averages mean nothing to me right now because they're twisted. They're only relevant in a trending momentum type of environment. So right now, I'm just kind of leaning on these orange lines. Maybe we see another bounce up to this orange line. That could be one if the bulls are, if the bears are seething and wringing their hands for another position for entry. Maybe that's the kind of entry they take from all the people who shorted in the hole. Remember, friends, don't let friends get short in the hole, because it's an oversold bounce is more than likely due. Not always, but more than likely, that's what we're going to get. So the people that are covering those shorts might be handing them off to the more seasoned, grizzled vets, again, that we're trying to teach in that ebook that we'll talk about at the end of this session as well. It's not a buy the dip market anymore, and it's very hard to find follow through when you break lows as well. Some of the most vicious rallies, I mean, ask these people 3 days ago, that was a vicious rally off the lows, and then a vicious reversal again. So we're back to chutes and ladders, that little kid game we had when we were little kids. Long candles, red and green, back and forth. The only thing you can do to really weather this storm is downsize your share size. A quick look at the NASDAQ. Same kind of instance. I don't have any of the pivot lines really drawn so much in this one, but we're still below all of the keys. You know, the relevant thing happened a few days ago over in the death cross. If people want to give credence to that, I saw somebody put up a pretty good table of data, and every time this death cross happens, it gets weak for about 3 or 4 weeks. We see some weakness, and then it starts to regain. But I wouldn't be surprised regaining to the upside with that data that we've had, the data set to work with the 9-year bull market we've been looking at. But these death crosses can mean something in the short term. So I still see that as well. The IWM was the one that was leading us lower to begin with, and closed horribly weak today, even a little bit of red color on that candle, but same kind of idea, oversold bounce, catching the people leaning short. The ones that didn't get a good entry up here are going to be panic mode. And then lastly, the Dow, same super long candle. So a couple takeaways again. I think just a reminder that it's very difficult to short and establish a short position. Once you break down through the lows, the meat of the move has already been gone. So you got to start turning it upside down. And if you don't learn how to run against the herd, running with the herd is going to slowly bleed your account. I can tell you that. There's no edge to be had running alongside the herd. And that's it. That's all I got for you, Jamie.
Good stuff, Steve. And that strategy that you were referring to yesterday hammered today's strength. I believe that's what it was
Thank
called.
you. Oh, there we go.
Christopher pointed that out as well. I knew there was hammer in there somewhere.
I'll be looking for that tomorrow. And then I want to see some, I bet we might see a few trades come from that tomorrow if the market warrants it.
Oh, yeah, for sure. It'll be interesting to see if it shows up once or twice in the 2.0 or Neo versions, because I think there's some custom formulas that get thrown into that one, but I do not know. I have to go back and look. All right, thanks for that, Steve. Let me grab the baton from you and get back over here. And we're going to continue. We're going to, I'm going to show you guys some stuff. We're going to revisit the NR7 alert window that we talked about last Monday because, well, it's spitting out some pretty interesting things. And what I really like about that little window in using it in conjunction with that 10-period SMA that Steve was illustrating earlier is the simplicity of it, right? So we'll get into that a little bit later. We're also going to talk about, here we are in no man's land, right? Is it a long day? Is it a short day? Well, today it was kind of both, right? We had good movement to the downside to start the day. So if you were short, that was great. But then we had a reversal and, to the upside. So the market in and of itself is a little bit schizophrenic. No big surprise when we're in these areas right here. Definitely what we would call a risk-off day because shorts were there, but they reversed. Longs were there at the latter part of the day. So there was a little bit of everything to be had today, but that does not mean that it was easy, right? Never is. Some days are easier than others, but they're always what we might call difficult. And of course, when the market was trending, hey, fun and games. It's a lot more, a lot more schizophrenic down at these levels until we really, make some ground up or go down there and penetrate those lows. But, we tried to do that today. Boom, bounced right off that little area of support. So let's do this. First off, I saw David was commenting on the compare count window that I like to hand out for the big caps, which I like to watch in the first 15 minutes. So of course that would go under the expectations tab right here. And to your point, David, yes, after the first 15 minutes, I was talking to
Did we just lose Jamie? So I take it you guys heard
other guys this morning. I'm like, wow, that's a
lost you for a second there. Might want to might want to rewind 30 seconds.
Okay. All right. Well, I didn't even get a message over here or anything.
No,
okay.
I hear you.
All right. Well,
cut out. Try again.
Okay. All right. So what I was talking about here is expectations, right? And I saw David was commenting in the questions panel about the readings of my compare count window showing quite a significant upward bias after the first 15 minutes today, almost 60%, which if you've been watching this window for a while, you know that anything above 55%, gets more and more significant the higher above 55% typically. So yeah, we did have these readings after the first 15 minutes today. However, when the market looks like this, I mean, these are almost foregone conclusions. Did anybody know for certain that we were going to stretch all the way down here and kind of belly up to these little levels back here, like making a run for this area right here? Nope, but it gave it a good try and then quickly snapped back up. Then the market finished overall slightly higher on the SPYs. Basically just got back to where we closed, right? The bottom line is this: when the market is in these conditions, man, it's hard to peg. You know, you couldn't have just placed all your eggs in the basket and went, okay, after this first 15-minute candle, I see extremely bullish sentiment, because you would have had to sit this little wiggle here, which nobody likes to do. But as Steve was illustrating earlier, you give it a little bit of time. You see this bottom put in, you're like, okay, well, let's these numbers do get some traction. You know, let's see if that upward pull does come into play. Of course, as long as we're under that 10-period SMA, it's anybody's game, right? But as soon as we get that first close above, there was a little bit of upside left on the plate, you know, maybe half the move of the day, which is still significant, you know, by anyone's, you know, call or book. So, you know, keep in mind, these compare count windows, they're not the holy grail, and they're a lot easier to make sense of when the market is trending. And of course, not exactly the type of market that we have right now. But it was interesting to see that the overall pull for the second half of the day was to the upside, right? Okay, moving right along here. Uncertainty, hey, we're still in a big uncertain period here. Now, logic would dictate with this bottoming tail that we do get a little upside push. Now, are we gonna cruise all the way back up to the top here? Maybe, maybe not, but we've all got front row seats. So how did Holly handle the day, right? So let's talk about the Holly trades today and how the Holly AI, all three components functioned, which when we look at the trade count over here on the channel bar, what do we have? 27, 31 total trades. Not a bad trade count. Not too much, not too small, just right in the middle, Goldilocks, all right? And what are we noticing on all the risk modes? Off, off, off. No big surprise. No big surprise, because risk on is us holding, wanting to really maximize things that are trending. But hey, as we already know, trended down for a little bit, then decided we want to trend back up for a little bit. So seeing all of the AIs finish at a better risk off total is no big surprise, because what is that telling us? Things are in the money for X amount of time, but they're not going to stay there. They might stay there, but not near as much as what they were at the max, all right? In other words, in this max profit column. The most FAS was ever up today, and I just went ahead and clicked on that one, was $1.71. Now, Holly pulled out of it right about here, played it pretty dang good, all right? 1.4, all right? From a percentage basis, it's showing risk on at the close of the day, but where's my risk off percentage? I thought I had it up here. There we go. Okay, so 2.74% Holly clipped out on FAS today, and pegged it pretty well, because if you didn't take it and you hold on for more of a push, look, looks very similar to what we were seeing on the indexes, you know, as just exactly what Steve was talking about, shorting into the hole, all right? Once you see this type of action, it's very uncertain unless the whole market is pushing through as one and we've got massive volume levels. Well, more than likely a bounce is inevitable. So it's no big surprise to see, hey, timing is everything. Holly played it pretty well. Maybe left 30 cents on the table from the max profitability, but if you try to hold that thing for more, end up taking it away and then giving money back to the market. So we always like to talk about risk on plays here. Pardon me. The heat situation has just fried me as of late. So hold on one second while I get a little bit of water. Clear the old throat here and save you from that noise pollution. But the bottom line is this: there just wasn't anything trending. That's why we're not seeing a whole lot of risk on here, because if you weren't taking those cookies, as I like to say, next time the plate came around, you were given crumbs, if not having cookies taken away from you. So that's why we're seeing the risk off here larger than risk on. The timing was working. Holly was playing things appropriately, obeying her rule set. And just to recap, that's what risk off is. Holly obeying all of her rule sets. Profit targets, stop losses, timed holds, or exercising one of her two audibles in profit save or reduce risk mode. So Neo putting on quite a show, up 2.82 points on 15 trades, not too shabby. And looking at 2.0, same thing. Now, there's always going to be a little bit of risk on. So let's just take a look at one of these so we can illustrate whether you're new or been watching this for a while. Never hurts to kind of rehash these. So here we have one showing a higher risk on total and Holly with risk off. Now, she was still minding her P's and Q's even on this one, right? Because she flatted the trade right about here. And once again, the shaded area corresponds with Holly's risk on, or excuse me, risk off time. And then what happens shortly after that? Boy, comes down here, just barely tickles that stop area, and then whoosh, right back up. Now, pointing out parallels here, what are we noticing about this green line, which is the 10-period SMA? Very similar to what Steve was illustrating in the SPY. As soon as we got a candle close above, boom, started hugging the other side of that line, and we got a nice upturn, a nice uptrend. So a lot of the times, if we're starting to see, Holly down here at a stop area, and we're noticing that the market might be catching a little traction, putting in a bottoming candle as well, well then sometimes, but not all the time, these stop areas can act as good entry points, or taking note of the tail that's been put in. What does this mean exactly? What is the tail? What is the candle body? Well, sellers tried to take control, but the majority of the volume in this candle was done up in the body, right? That's always a good signal that's always a good sign if you're trying to get long something, waiting for a bottoming or, a wiki tail like this to come in, because that gives you assurance that,
And did we lose you again, Jamie?
It's probably his new heater.
Yep. Back? No?
what? They took control for a minute, but they couldn't maintain control.
Yeah, we lost you again for a minute.
Okay, am I back now? How about now?
I still hear you.
Can you hear me now? Like the old cell phone commercial.
It was like 30 seconds both times. I don't know what the deal is.
Well, apologies. I guess when it rains and pours, got heater problems, got internet problems. Yay for me. In any case, was pointing out the fact that when you see Holly getting stopped out and you notice one of these bottoming wicks, a lot of the times that can be not too bad for an entry signal, whether you wait for the next candle to open and use the wick as your out, or as Steve was illustrating, waiting for a close or a creeping above that 10-period SMA, right? So, we focus a lot on what Holly does as she's doing it, but I always like to point out sometimes, depending on the day, even if Holly mistimes something, we can still jump in there and take advantage of it. Now, assuming everybody can still hear me, I would like to address a question that one of the users was asking earlier about the differences between the Holly modules, right? We've got Holly Grail, the original 1.0. We've got Holly 2.0, and we've got Holly Neo. So Holly Grail was the first AI that we brought in 2016. She uses all of the same
Yikes.
alerts and filters that everybody that uses TI Pro. Again,
Yeah, just for 30 seconds.
are you kidding me?
It's been like 3
Again?
times now. I'm not sure. You must have a hiccup in your ISP today.
Well, I guess so. Getting pretty annoyed over here.
Sorry.
Okay. Well, I'm gonna try.
The gods are really testing you today.
Okay. Try one more time, ladies and gentlemen.
All right.
If this problem persists, I don't know what to do.
Yeah.
In any case, I don't know where I got to in describing how the three AIs differ from one another. I know I started off on that topic. Did I?
You got into it a little bit.
Okay. Holly 1.0, the first AI that we devised, came online back in 2016, and she uses all of the off-the-shelf alerts and filters. Same thing that anybody that subscribes to TI Pro has access to, right? That's what she does. She optimizes and backtests and uses the statistical model to generate these data sets. Now, bring in Holly 2.0 and Neo, which came not too far after 2.0. So the main difference between these two guys, Holly 2.0 and Neo, is that they can make use of custom filters that have been created. In other words, filters that don't exist off the shelf, but custom things. So these two can incorporate custom filters, whereas Holly 1.0 does not. Out of the two that can incorporate custom filters, Holly Neo is definitely the more aggressive of the three. All right, you're going to see Neo have bigger winning days. You're going to typically see Neo have larger losing days because it's more of an aggressive nature. Notice that it did 15 trade. It did the most trades today out of any of the modules. So I hope that covers the question that was, what are the differences between the three AIs here? All right, so getting back to the SO trade, yeah, it was a risk on that came to our attention, but there was a stop out incurred. Let's take a look at LNT. All right, almost the spitting image, but we'll notice here no stop out. All right, so same thing applies. We see Holly almost getting stopped out. Maybe we wait till the next candle, take an entry and use the bottom of the wick. Maybe we adhere to Steve's philosophy, which is also mine, which is a close between, or excuse me, above that 10-period SMA, right? And even though Holly was out of the money initially, still could have acted as a decent entry signal. So in other words, to use the analogy once again, which it's very applicable, Steve and I used to trade in a trading office, right? We'd see somebody get stopped out or almost get stopped out, and we go, looks like a pretty good time to enter the trade. Well, that is exactly how you can use Holly. It's another way to key off of her trades, even though they don't go immediately, right? Because it's all about the timing. This statistical probability that's assigned for each one of these strategies, it's good for the day. And then it's all about timing, right? Everything's about timing. So, not a whole lot of risk on to go over today. There was one that was sticking out. Let's see if I can find it here. I think we might have already talked about it. Yeah, other than this one right here, which was the AVYA, which was one of the, I think it was the very first trade out of the chute this morning, about 26 minutes into the open. Get short right here. We get a little ebb and flow around the entry line, not quite up to the stop, right? And we just get this little consolidation area right here. This is not necessarily a bad thing. Simply means buyers and sellers have become equal, and a little bit of time, and then we get the whoosh down. Now, coincidentally, look what's happening here. When it cruises through here and finally breaks, look how that 10-period SMA is just tap, 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 keeping it down, comes down here, changes direction, right? So the 10-period SMA is not the holy grail, but boy, it's one of my favorite indicators. Thank you, Steve, for turning me on to that one. And as I've gravitated to a longer time frame on the intraday, it's uncanny how this 10-period SMA will act as the guiding hand. All right, speaking of the 10-period SMA, I want to shift gears here and talk about the NR7 window that we talked about last week. So what I'm going to do is I'm going to pull that same window over here, and I need to incorporate this into channel 4. Have not done that yet. We'll probably do that in the not too distant future. So fear not, I will drop this window into the chat panel before we're done today so that anybody that would like to can start paying attention to it. All right, Steve, I see you answering those questions. Perfect. All right. So NR7, what exactly is the NR7 alert? Just going to pop back in here and notice that we're using the 15-minute narrow range alert. Now, the little icon that you can barely see here is kind of indicative of what we're looking for. We're looking for what you might term a consolidation in the short term, and then we get an inside bar, and then that's indicative of a move, right? Of course, a lot of the times we don't know if that's going to be up or down. We have to consult, you know, what's happening on the chart to try to figure that out. This one, we're going to notice a lot of long plays today. So, you know, everything we do here, ladies and gentlemen, is teleprompter free. I'm just going to scan through these guys, and we're going to take a peek at the behavior of some of these trades. Now, since we're using the 15-minute time frame, which is good for these types of plays because each one of these bars being 15 minutes, you want to give the pattern time to develop to where you don't have to get across the room and squint your eyes to go, oh, yeah, that's consolidation, right? We want them to be obvious, right? So for these, I like to start about 2 hours into the open. That gives us 8 15-minute candles to make sense out of, right? So here we are looking at the 10:45 area. Market opens at 8:30 here. What do we see? We see wing come across. Now, look at where we're getting the entry signal. Notice how smooth this little area is right here. So we can play a couple of different games here. If you're like me and you love these range breaks, and the reason I love them is because they're simple, right? And they're very identifiable. And typically, if you catch them just right, your risk is pretty low as well. So what do we see here? Okay, well, if it gets up here, if it stays in this little, you know, sideways channel right here, and then it gets up here and cracks right here, we've got a range break. But we're also getting the idea a little bit before because of the range parameters I have programmed into this window. And then what else do we have here? I think that if, you know, we could take questions here, everybody would notice it's just hugging that 10-period SMA, all right? So, you know, whether we use the bottom of the range as our stop loss, or this what we might call the bottom of this little intermediate range here, you know, or, you know, a candle close below the 10-period SMA. And when I, you know, keep in mind, I say a close, and typically, you know, we'd have to have a close below there to really get me to worry. But I'm just going to scroll through here, and I think you're going to notice something here. All right. Some of these are going to be very tight. Some of them are not. All right. But check this one out. Right at the time of a range break, well above the 10-period SMA. What happens after that? Nice little move up. TLND getting a signal right here. Not exactly crisp and tight, except for the 15-minute NR7 that's in play. And keep in mind, this is a whole hour right here. And what do we have? Nice movement staying well above the 10-period SMA. Come on. Once again, more of the same song and dance, right? Whether we apply the range break potential or whether we just focus on the 10-period SMA, they're acting as very good guiding hands here. Once, hugging that 10-period, just above a range break right here. And of course, maybe we'll find one here in a minute that really broke down and didn't work. But you can see here, as I keep going along, all right, this is a good one right here. So all the ones that I just showed kind of moved up with perfect methodology, you know, whether we were, you know, looking at what might happen in the future with a range break and then being able to tack on to a position there, or here where, you know, we get a signal right here and boom, immediately get a close down from that 10-period, which, you know, that's pretty significant. But the good part about it is if you're going to take a loser, what a great loser to take, right? You see, these are relatively low risk trades with pretty simple exit and buying criteria, all right? I see a question coming in, Dan. If you're talking about this window, I'm going to drop it in the chat area before we're done here. But if you're just talking about the NR7 alert in general, best place to go, once again, all I did there is right click and hit configure. We can always just go to the search tab and type in NR7, and then here we have them. Now, I tried all different types of time frames. Of course, I would never even try to trade a 5, a 2, or 1 minute, just because, well, just too small of a time frame. Now, having said that, hey, everybody's got different taste. You know, if 1 minute, 2 minute, 5 minute are your bag, well, more power to you. I like seeing things that have taken quite a bit of time to develop. That's why I'm focusing on the 15 minutes, and also that's what I like with the 10 period SMA as well. Enough time to see things in that capacity. So I hope that makes sense. Okay, so moving right along here, if we just keep scrolling through these things, you're going to notice the same thing. Hugging the 10 period, and you know, if you get a good one here, what better way to exit, right? EPC. I mean, look at these things, guys. Boom, 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 and don't even have to worry about even getting flirty with this 10 period SMA until quite a time later and quite a bit of profit later. So we can just keep doing this, looking at these and seeing how that 10 period is acting as that guiding hand. And also too, a lot of the times, you know, we're getting things right before the range break or right as they've happened. So, you know, just very tame patterns are what this little window is kicking out. So whether you're new and trying to find a simple pattern to get you into the groove, or whether you're advanced, I mean, who doesn't like patterns like this, I guess is the question, right? We're all here to make money. We like to be right, but in the end, it's, you know, not about being right. It's about taking the money when it's there. I can't tell you how many times I've been up in the past, or I hear a trader talking about, I was up, but then I didn't take the money because I wanted to be right, right? What does that even mean, right? Well, I was up 1%, but I was pretty certain it was going to go up 2%, right? So once we get into these trades, we have to exercise a little bit of trade management, right? Because we never know. Even if the daily shows a big gap or shows a lot of room, nothing's ever guaranteed, right? We have to take some off the table. If we feel like it's going to go higher, okay, let the second half run, just like we talk about with Holly a lot, but readjust that lot or that second lot to a break even and protect the money when you get up. Never been so obvious as a day like today. Hey, started off nice and short. If you tried to hold on in this market condition, didn't work out so well, you know. So I hope that makes sense. Let me see here what I'm forgetting to talk about. Okay, so
Uh-oh. Let's wait till he comes back.
pretty straightforward, right?
Pretty straightforward. Oh, now he's getting choppy.
Okay, am I back now?
Yeah, getting a little choppy, but I hear you.
Oh boy, I'm being tested today, Steve. Can you hear me?
I know. Yes, I can. And yes, you are.
Okay, yeah, great, great. Okay, so to recap, why is the NR7 alert window? Why do I like it? Because of the simplicity of the patterns and the simplicity of coupling it with the 10 period SMA. So what I'm going to do real quick here before I drop off the face of the earth again is I'm going to drop this one into the chat area so that those of you who want to experience it may do so. Can you still hear me, Steve?
Yep.
Okay. Now, in addition to that, let's just kind of look back at where we are in the market. as Steve was talking about the hammer today, maybe we're going to see a lot of things tomorrow. Maybe we're going to pop up to here. Hell, we might even get out of there. We just do not know at this point in time, right? Are we going to go back up? Are we going to pop highs? Are we going to cycle around here and eventually test lows? Unknown. And anybody that tells you they know what's going to happen is pretty much lying. But I will tell you, things that are showing up that haven't been showing up, what I've got here, ladies and gentlemen, is my pack losers top list. Okay. Its friend, its cousin, its brother, we should say, is pack leaders, right? For the longest time, pack leaders was as full as pack losers. But even when we were bottoming that first time, this list was nowhere near this populated. Matter of fact, I've never seen it this full by a long shot. Maybe it got down to here. Maybe it got down to here, but it's all the way down to here, right? Now, I'm not sitting here telling you, this is definitely telling us that the market is going down. But what I can tell you is that the things under the carpet that are the market, which, from a humanistic standpoint, we have very limited field of view on what's going on the whole market. We have things we like to watch. We have favorite mechanisms. We have favorite studies and all that good stuff. But the market is this huge sea of data, right? And we all try to make sense of it. So I can't tell you what's going to happen, but I can tell you this is interesting, right? Now, are we seeing the pieces underneath getting rearranged for a potential rotation, right? Or are we starting to see the foundations of the market get weaker and weaker? I don't know yet, but all I can tell you is seeing this many stocks, and these aren't exactly the small caps, being at all-time lows, lifetime lows to be more specific. That's what this list is, right? So seeing this many stocks on this list is definitely something to pay attention to. So it could be that the pieces are getting moved around underneath, and just something to pay attention to. So what I'll do, in case anybody wants to kind of keep tabs on this list as well, is I'll go ahead and drop pack losers in there as well. Of course, it's probably available on channel 4. If anybody would like the cloud link, there we have it as well. Okay, ladies and gentlemen, we're about 9 minutes away from the top of the hour, and taking into consideration all of my internet issues, coupled with my heater issues and all that good stuff, I think we're going to go ahead and call this one today. Right. So, Scott, if you're ready to tell everybody how they can save a little bit of do-re-mi on an upgrade or a new subscription, I think we're good to go here.
Cool. Yeah, you might want to get like a little cooling fan for your router. It seems like it doesn't like the heat.
Ooh, good point, Scott.
Yeah,
I will do that.
Yeah, stick a little fan on it. So there's we have Brokerage Plus, which can automate your trading. We're adding AI to Brokerage Plus next year in the Q1. We're releasing our second wave of Brokerage Plus licenses in January. So the way to get on board is to deposit $100 towards the total payment. You can find out all the details at trade-ideas.com/Brokerage Plus. Just go there. It's got the FAQ. You can find out. Essentially, it's a one-time $1,100 lifetime license. You do need to have a premium subscription to use it because you need that kind of data feed. But it'll let you automate all your trading, take the emotion out of it. You can use it with Holly at some point in Q1. We're not sure exactly when we're going to release the Holly update to it. But you can get on board and be ready for it by going ahead and doing that deposit. Again, just go to that URL. You can find out the details. Any other questions, just shoot us an email and we can fill it in. There's a great ebook that's very timely. Both Jamie and Steve contributed chapters to it. It's 5 ways to continue to win in a post-BTFD market. And if you've been in the markets lately, you know how that is. So trade-ideas.com/ebook. Just plug in your email address on that page, and we will send you a download link. It's really handy, nice little PDF to keep in, like on your desktop to consult and make use of the strategies. We did not have a new podcast last weekend, but we usually release them. It's getting close to the holidays, but you should just go ahead and subscribe. We're probably going to re-release some great stuff from the archives this week and over the holidays, and then we'll be live again in January. So get ready for that by going to Trade Ideas, by searching for Trade Ideas Podcast in whatever podcast app you use. And you can just hit on the subscribe link, and we'll be posting some best ofs, and then back in for season 3. It'll be our 3rd year with the podcast starting in January. Get ready for that. Lots of great content. If you're ready to become a subscriber or upgrade your standard plan to premium, use this code this month, HollyBerry, all caps. Lets you save 15% off your first month or year of Trade Ideas, or you're off your first month or year of an upgrade. And we also now, especially for annual programs, we do give you a discount according to how much you've already put in. So we do prorate now. So you can go ahead and do that when you go to tradeIdeas.com and then click on the login button in the upper right if you're already a subscriber and change your subscription plan. You can apply the code there and do that. Any questions, email us, info@trade-ideas.com. That's the best place to send all your questions because it goes right into our help desk software and gets routed to the appropriate member of the team to give you a quick answer. You can also follow @QuantBot, that's Jamie on Twitter, and @TodayTrader is Steve on Twitter. We also have @TradeIdeas. Facebook.com/TradeIdeasPro is the page to follow on Facebook for all of our updates that you can share with our friends or your friends. Thanks, everyone. We will have a recording up later on tonight or tomorrow morning, and we'll send you an email tomorrow with a reminder of how to find it. So stay tuned for that. Thanks, Jamie. Thanks, Steve.
Hey, thanks, everybody. Sorry for the technical difficulties. Hopefully we'll get those cleared up. Thanks for popping in, and we'll see you tomorrow, Steve. Bye-bye.
Yeah, it's a Monday. Later on, guys.
Yeah, typically.